Welcome, everyone. My name is Nick Hershey, president of the Mortgage Calculator. We are a licensed lender and mortgage broker here in 20 plus states, and we have over 200 loan officers on the team that would be happy to quote any of our mortgage programs. And what every day, let's check out the general rate environment and check out our rates for all of our standard programs. And then we'll do a deep dive into Prime Jumbo. So as rates are dropping here, Prime Jumbo, definitely a great option for any of our borrowers that are looking to perhaps exceed the conventional loan limit. So if you have any questions or would like a full breakdown, a full loan estimate on any of the things we see today, please go to our website, themortgagecalculator.com, or meet up with one of our loan officers here. They'd be happy to give you a hand. Let me go ahead and switch my screen, and we'll check out the rates for today. And what we typically want to check out here is the 10-year Treasury yield. It lets us know what's going on in the rate environment, especially as we're looking at all kinds of different loan programs here. We're talking about conventional, agency, government. We're talking about non-QM. We do all kinds of different options. So this is going to be the best indicator overall of what rates are doing. And the news is in our favor recently, which is pretty amazing. And if we pull this back a little further, right now we're looking at the 5-day look back period. And if we look at the last year here, we're at 1-year lows, and in most cases, multi-year lows, 3-year lows right now in general, pretty much across the board. So great time to be out there looking for a new mortgage. And now let's check out our specific rates here at the Mortgage Calculator for actual loan programs. So this allows us to compare all different rates for standard scenario. We have a standard 1-unit single-family home, a $500,000 purchase price, $300,000 loan amount, corresponds to 60% loan to value, 760 estimated FICO credit score, 40% estimated DTI. That's what we set in the scenario here, so we can compare all the programs side to side. We're going to look at the lowest rate options scenarios here. First up, conventional for a primary home, what most people think of when they think of a mortgage. Standard 30-year fixed conventional loan, rates as low as 5.625. Hopefully we'll see that come down a little bit more here maybe next week. Final APR 5.857. Definitely on the downward swing. And if our customer doesn't qualify conventional, we want to check out FHA, which allows more leniency on credit issues, higher overall debt to income ratio. Does have additional fees, so the rates appear lower, but we always want to compare APR. Rates come in as low as 5.125, but when you add the upfront and yearly mortgage insurance that's required, final APR comes in at 6.006 here, so a touch higher than conventional, which is as expected. And if our borrower is eligible for VA, these programs are amazing. Rates as low as 5.125, but with the much lower fees for our eligible vets, active service members, and surviving spouses there. Final APR comes in at pretty amazing 5.373, which is much better than anything on the board here. So typically the best option for our eligible VA borrowers. And up here, we'll look at USDA for properties in those USDA rural areas of the country, the eligible areas there. Rates as low as 4.99, pretty amazing. We see fours again. And final APR there, 5.676. So for our customers looking in those areas and can qualify for the income as well, definitely a touch lower than conventional or FHA if they're comparing that. So USDA, great option if you're looking in those areas. And where we love to shine here at the Mortgage Calculator, and will be one of our topics for today, are non-QM alternative programs. So if our customer is unable to qualify for any of the options that are pretty standard there that we've seen before, we can go non-QM alt doc and use alternative docs. So helps our self-employed borrowers many times. We can use bank statements, 1099s, P&L statements, all kinds of different options here. So for primary home, rates came down just a touch here. Rates as low as 6%. Final APR 6.272, and that's just a touch higher than conventional to switch over to use alt docs, which is pretty amazing. And we can use alt docs for investment properties. Rates come in at 6.125. Final APR 6.448. Not much change there. And for conventional investment property, standard 30-year fix comes in at 6.125. Final APR 6.438. Pretty much the same as it has been. Something exciting here, though. We've seen some change here on DSCR, which is me, one of our favorite programs here. continues to be aggressive. DSCR is debt service coverage ratio, no income or employment. Simply use the estimated rents from the investment property to determine a DSCR ratio. If the estimated rents can cover the estimated expenses, aka the property cash flows, that's a DSCR ratio over 1. That's what we use for these scenarios here. And on this one, we added a 3-year prepayment penalty, which is pretty standard. Rates come in an amazing 5.875, final APR 6.169, beating conventional, beating doc, absolutely amazing. And we can add a 5-year prepay. Haven't seen rates this low in years, coming as low as 5.75. So haven't seen that in quite a while. That's pretty exciting. Final APR comes in at 6.054. Just smoking, conventional, all doc. Pretty amazing there to have a DSCR option that's beating our conventional. And we can have no prepayment penalty on DSCR as well. So rates come in there at 6.125, final APR 6.448. Still almost identical to conventional. Investors, if not all, would choose DSCR over conventional typically. We have a ton of different options here. There's dozens of other programs that are quoted here, but let's get into our topic for today. And we're going to look at actually the same property as we looked at before. It's a great example here. So this is a property just that's for sale nearby me here, and it's a great example. It's is going to exceed conventional limits. So when we're talking about prime jumbo, we're going to be talking about a loan that otherwise is very similar or identical to conventional, which is what we typically think of, except that it's going to exceed the loan limit. So the conventional loan limit, but the 860 something right now, we're going to blow quite a bit past that here with a $1.375 million listing here. So when we start to exceed the conventional limits, our options are non-QM, including a lot of the stuff we've looked at before, using bank statements, using alternative docs. But we also have our more traditional prime jumbo, which is almost identical to conventional in every way besides the loan limit. So this is what you might think of when you hear jumbo loan, where there's no alternative docs being used. So the first example is if our borrower wanted to purchase this home as a primary home. So here are, let me zoom in just a touch more. Our prime jumbo for a primary home, we can go as low as 10% down, actually technically 10.001. The LTV max is 89.99. So just $1 under 90% LTV is the maximum here. So this is for that exact home we were looking at there. And another couple notes that I put in here. There are other full doc options under non-QM, but they're more expensive, but allow us to have more flexibility. These options use the conventional AUS system, so automated underwriting. So we're going to set this up just the same as a conventional loan. We're going to even use the automated underwriting. It's going to say eligible, or approved, and ineligible as the only reason would be exceeding the loan limit. So in other words, this would match a conventional loan in every way besides the loan limit. And when we go up to the 89.99 LTV, it's like other non-QM loans, this has no PMI, which is another benefit here of not actually being a conventional loan. Let's get into the rates here. Pretty amazing. Rates as low as 6.125, has a cost of 2.5 discount points. And the lowest cost option I was able to find there on this program, 7.125 rate, had 1.25 discount points in cost. So that's pretty amazing to allow us to put 10% down on a property that would otherwise exceed the conventional loan limit by almost $400,000. So we're well into the jumbo range here. Obviously, there's super jumbo and loans for much larger loan amounts. But this is typically when a borrower, unfortunately, can't qualify for jumbo, needs a similar program, but is going to blow past that limit. And you see here we're at 89.99 is the exact layout here. You can see the FICO score that we set is 760 as we did in our other examples. Now let's switch this up to our second example here. If our borrower wants to use this property as a second home, very common. And we can still offer that 10% down. It is quite a bit more expensive here, but otherwise it is almost the same quote as the primary home. The rates are just a little bit higher here. So 7.75 rate has a cost of 2.5 discount points. And the lowest cost option I was able to find there, an 8% rate, having 2.125 discount points in cost. That's pretty amazing to still put 10% down on a second home. That exceeds the conventional loan limits by quite a bit. And otherwise, this is set up the same. And now the final option. This is more, I would say, less common. Here we have a prime jumbo for investment, and we have to switch that up to 20% down. So when we switch this to investment, we need to put 20% down. Still some pretty low rates you'll see here on my screen. However, most of our investors typically lean towards the DSCR and other non-QM options, but you can't quite get these low of rates under those other programs. So pretty amazing here to put 20% down and still get some rates in the fives. So that's why this is still attractive. So we look at the rate options here. 5.625 lowest rate option has 3.25 discount points of cost. Pretty spendy there. But we have an option 6.375 rate. Again, very reasonable. We're putting 20% down. That's why. Having 1.375 discount points of cost. So remember, if we put 20% down on primary, the rates would be much better as well. And we're putting that 20% down. We're still exceeding the conventional loan limit. So that was why I wanted to do this example. And everything else is set up pretty standard. We just switch to investment property occupancy, and we have that 760 FICO. So those are 3 examples of the 3 different occupancies for our prime jumbo options. And again, those are great options for our borrowers that would otherwise qualify for conventional. We'll just exceed the loan limit, much more reasonable rates in most cases. Once we have to use alternative docs, the rates are a touch higher. Those are great examples. So hopefully that helps some of our borrowers out there that are getting excited to be out there shopping again. Prime jumbo is coming back, and hopefully we continue to see those rates drop as rates update next week. So we'll be back next